Hi, good morning, everyone. I request all the delegates to please settle down. We are going to start with the session. On behalf of Access, I would like to extend a very warm welcome to you all to second day of the 19th Inclusive Finance India Summit. We have three technical sessions that we are starting with on day two. This is Hall B. And the session here is agent banking quality, viability, product and service diversification. This session is being hosted in partnership with Grameen Foundation India and will deliberate on evolution of agent banking as a functional solution for achieving financial inclusion. It's my privilege to invite on stage the panel for this morning's session, moderator, Mr. Prabhat Lab, Chief Executive Officer, Grameen Foundation India. Prabhat, please join us on stage. I'd also like to invite the panelists, Shashidhar, CEO and Managing Director, SAPK, Mr. Sunil Kulkarni, Chief Executive Officer of BC Federation of India, Ms. Chetna Galasina, Founder and President, Mandeshi Foundation and Mandeshi Bank, Prabir Burwa, Program Officer Financial Services for the Poor, Bill and Melinda Gates Foundation, and Pallavi Madhok, Head Advisory Services India, Women's World Banking. Thank you all of you for agreeing to join us for this panel. And Prabhat, we would request you to take 1 hour, 15 minutes for this session. Sorry for losing out on time, but in the morning session, we have people coming in a little late. Thank you. Over to you, Prabhat.
Right. Good morning, everyone. Thank you, Radhika. It's really wonderful to be here on a cold, winter morning. But we have an amazing panel here, and really looking forward to this exciting, energetic conversation on this very, very important topic of business correspondent networks, looking at quality, viability, all of that. And we couldn't have asked for a more kind of, better composition of the panel, because so many different perspectives which are reflected, in this exemplary panel that I have, and it's a privilege to be kind of moderating this discussion. So if we reflect back on yesterday's conversations, a lot of talk, happening about one, just the sheer outreach of what the business correspondent model is doing today, like 3.3 million agents. You're talking about this industry creating 3.3 million jobs directly. We have 450 million PMJDY accounts, and a majority of which are actually getting served by this network. So you're talking about, hundreds of millions of people who are being able to use different kind of financial services today because of this BC network that we have in the country, thanks to that, really innovative model that RBI kind of put together through the BC regulation model in 2005-6 when it came forward. And after that, of course, many really remarkable things have happened with Aadhaar coming in, with PMJDY accounts coming in, and lots of other things. So, and then, of course, government kind of looking at this channel to also deliver public benefits, direct benefit transfers, all of that. And so a number of kind of, innovations are happening. So we'll be talking about some of those. We'll also be talking about, in yesterday's conversations, some kind of, important aspects about, that in a country, we have a lot of people who are still kind of, left behind in terms of not being able to use financial service, not accessing financial service, even though it is available. So there was a conversation about access, but not usage, and how do we convert that? So we'll kind of try to come to that. So on this panel, of course, we would like to kind of have the conversation around three important stakeholders that we are talking about. One is the customer himself, herself, who we want to serve. The second important stakeholder is the agent who is trying to serve this customer segment. And third is the network provider, the agent network manager. So, and we're really fortunate to have, all these different perspectives kind of represented on this panel. So to start the conversation, maybe, Pallavi, if I can first come to you, and from Women's World Banking's perspective, you take a kind of, customer focus. If you can kind of, just paint briefly a picture of who is that customer we are trying to serve, what her needs and aspirations are, and then we'll see, how kind of that gets addressed. So Pallavi, over to you.
Sure. No, thank you, and thank you for having me here today. So actually, Prabhat, maybe I can explain this better with a story. I met this lady called Pratibha in one of my field visits in Shanjapur, which is a district in UP. And she, like most other women, had walked about 25 minutes to half an hour to the nearest BC point. This gentleman was Mr. Anilji, I think. And as usual, she comes once in 3 months to withdraw some of the benefits she receives in her account. Anilji this time, most BCs would just, process the transaction, let her withdraw, I think 1,500 rupees from her account, and then next. But in this case, Anilji was a different BC, I would say. He spoke to her about the need for saving in her account. He told her not to withdraw the entire amount. Keep something aside for your children. She had 3 children. And so she kept aside 200 rupees. He also made sure her account was linked to her mobile number. He updated her passbook. So she felt, that he gave her that little extra service. Of course, at that point in time, she had come to withdraw money, so she wasn't really going to save. A week later, Anilji had done a camp in a village close to her home, and Pratibha had again come to the camp with her friends, 4 or 5 other women. Anilji then spoke to them all about the need for saving small amounts, maybe 500 rupees, 200 rupees, 300 rupees. He explained the benefits of saving in her account. He spoke about insurance, overdraft, all the other facilities that the government provides on her Jandhan account. She then went home, got some 200 rupees, at the camp, went and deposited that amount. Next day, she went to the BC point, updated her passbook. Was very happy to know that her balance is now, I think, from 500 and moved to whatever, 700 rupees. There was a relationship that Pratibha developed with Anilji because she saw him as a person who cared about her financial health. She started saving gradually. And over time, I would assume that Anilji would then introduce more products to her, more benefits, and overall improve her financial health. So, as an example, what women are looking for from a BC point is someone who can guide them, explain products to them, build awareness, help them achieve their financial goals, and welcome them, most importantly. Yeah.
Thank you, Pallavi. It's wonderful to kind of start this conversation looking at the customer, because that really helps us being centered around, okay, who is the person, we are trying to serve, we are trying to impact. So thank you for sharing that. But then, how do we convert this kind of story into a everyday story where this thing can happen every day, everywhere, in remote corners of the country? And I'll turn to Sashi, maybe perhaps, who manages this agent network at Subke. In fact, it's fascinating. The name Subke itself, I don't know how many of you are aware. Subke, maybe you can explain how this name comes. It's actually about, by name, serving that small value transactions, small ticket size transactions at the base of the pyramid. But what the example that Pallavi shared, might at times sound utopian. Can we convert that into an everyday reality that every single agent, every single one of those 3.3 million agents can do and facilitate happen, so that she can actually, realize her dreams and aspirations and fulfill her needs?
Thanks, Prabhat. Just to add to that one point on the subcase, see, the name actually signifies the vision, in the sense that a touch point within every 1,000 meters. Also, it's not just about transaction below 1,000 rupees. It's also about a touch point within 1,000 meters or within 1,000 households. Basically, it's talking about hyper-local banking model. That is the whole idea behind how this organization started. But coming to the point which is related to this idea is that Pallavi narrated a very interesting experience which essentially talks about an agent converting from a transaction point to an advisory services. So, which is a journey, right? And if we look at our current network of agents, last decade, and rather last 5 to 7 years, thanks to PMJDY, that has actually propelled the whole growth process, all the industry has been very engaged in providing the access, like you just said. It's basically providing a network, scaling it to a certain level that it becomes meaningful for BCNMs like us to manage that business. So earlier there were agents, 1 in 10 villages doing 10 transactions every day. There were not many accounts in the banks, so there were a lot of challenges in managing the network, and there was no real viability. Now that accounts have been opened, the challenge was to make sure that there are touch points so that these accounts can be serviced, and hence a viable business model can be built. So the first phase was all about building the network, which essentially served a very basic need, which means these accounts are open and they're serviced in terms of allowing people to withdraw, mostly withdraw, but to an extent also put money back into the system. Now, the next phase, which I think has already come, and some of these examples are actually giving that inspiration, that what is it that this agent network is supposed to be doing? One is scale, the second is leverage, right? I think we have not leveraged this network enough, right? Hence, it is now time for not only, of course, as BCNM definitely, because it's important for us to even become more viable and more useful, but for bank partners to come forward to offer more services, because it is in the interest of the bank, the financial services providers, to leverage this network. So I see that happening. Many banks are now beginning to see this network. There was skepticism earlier. Now they are beginning to see this network as a potential sales points, right? So there is this whole upselling and cross-selling that is beginning to happen. More and more products are beginning to come in. That is so. Unless there is that product mix, this aspiration of goal-based savings models, may or may not work out. And I think it's not a very difficult thing to do. Banks are willing to look at that. The second aspect is agents' ability to deliver, right? So until now, agents are transaction points. They are basically facilitating a very minimal opportunity, but now they have to step up to educating their customers to use a product effectively, which is basically, it's not possibly easy to be done by all 3.2 million, but I think a certain percentage of these agents, I think, and as enthusiastic as Anandji, probably are ready. So we should identify those agents and start providing necessary training and capacity building so that those agents are able to serve the customers in a more meaningful manner, and then the rest of the community will follow. The third important aspect is the ability of that interface, the technology, to be able to handle the complexity of the financial services bouquet that we're talking about, which is again not something that is not possible. It is doable. A lot of us have actually built those interfaces, which act as marketplaces in some sense. So there is a micro marketplace sitting there, but of course, we have to test the idea in scale, and hence I think there's a lot of technology play that is also critical, which is what is BCNMs and fintechs are working on. So I think if these three things come together, the training aspect, the products, and the technology, and all three are doable, and all three are moving forward, and I feel that the day will come when many such agents will be in the system, offering more meaningful and more diversified services to the customers.
Thanks, Sashi. If I can kind of drill down a little bit on some of these ideas, like you talk about, let's say agents who have the capability to deliver these kind of services. Now, building that capability will require investment, and that investment has to come from the margins that this business kind of generates. And we know that this is a low margin business in general. So it's about maybe the conundrum of one, the viability, which kind of then generates enough margins so that you can invest in technology platform that you're talking about. You can invest in agent training who can deliver all of these things, educate customers, build trust. So how do you kind of approach that? And after that, I'll come to you, Chetna ji, to talk about some of these examples. But Sashi, first, if you can drill down on this thing.
I think training and capacity building is more, in my opinion, a public good in a lot of ways, because this is a network that is serving also a social purpose, right? In terms of inclusive growth, propelling inclusive growth, accelerating or lubricating the whole financial system in some sense. So I think while these BCNMs have responsibility of investing in the agents, which we do all the time, and Of course, if it is going to generate more revenue, we would invest more. That is a part of the business model. But there is a larger aspect, where customer protection aspects are taken care of. There are aspects related to code of conduct. There are things related to educating our partner banks. Also, it's not just about training the agents. I think where the industry bodies can also come together, like Sunil sitting here, BCFI, in some sense, actually is a good platform to think about the larger public good aspects of training, where we kind of proselytize the idea that BC agent networks are more useful than being just transaction points, and hence there will be interest from various stakeholders to invest in that. So banks also should invest in training, government should invest in training, BCNMs will invest in training, so that all of us share the pie, and hence the whole network can become stronger. So I believe there are roles played by every player in addition to BCNMs, which obviously is a business prerogative. Yeah.
Thanks, Sashi. I'll now come to you, Chetna ji, and I think yours is a unique example of Mandeshi Bank, where it's exclusively focused on women, and also you have most of your employees and agents are women. And you also have a unique perspective whereby you have, as a bank, you are the product owner. So when a customer has certain need, you can service that need through right kind of product development. And you have the delivery channel, which can deliver that product to the customers. And both, I think, especially in the context of the BC networks, we often, talk about this challenge that BC networks are controlling the channel, but they don't control the product. So I think, if you can share some examples of how, you have tried to kind of use this advantage to be really, customer focused, customer centric kind of organization. And some examples, I know that you really, have worked at two extremes of how many of you do not understand Hindi? I'll just use some Hindi words. If you do not understand Hindi, just raise your hand so that I have an idea. Okay, one person does not understand Hindi. Rest all will follow a little bit of Hindi. Okay. So एक प्रश्न मैं आपको हिंदी में पूछता हूँ. So आप एकदम एक्सट्रीम तरह के आपके प्रोडक्ट्स रेंज हैं जिसके बारे में मुझे पता चला. एक तरफ आप कस्टमर्स को बकरी खरीदने के लिए लोन देते हैं, goat loan, and you're also giving gold loan so that people can buy gold. Extreme end, of the. So how did that happen? This kind of diverse kind of program that you're offering, and how kind of how an organization which believes in that customer centricity then is able to build customer trust. If you can talk about some of those aspects, that'll be helpful. Thank you.
Thank you. And thanks, Prabhat, for having me here. One thing I would like to say that, when you work with women in banking, or I would say that Mandeshi was started by community women, that they needed bank for savings. So it's very interesting that in my journey of last 25 years, what I've seen is that women, whatever they need related to finance and asset creation, they would come with their ideas. And when you mentioned about the products, I would just like to say that I remember in 1999, when the Ganesh festival started, many of our women said that we want to save now so that in Diwali we can buy gold. And we want to save daily. So then we thought, how are they going to save daily? And they want to start saving in August, and they want to buy gold in October. They knew everything. How much they want to buy, how much they want to save. So I was a bit surprised by their planning. And so we thought, okay, why don't we have our women sakhis who go and take the savings and open a saving account, and we designed this gold product where women can buy gold during Diwali. And you know what they bought when they said gold? They said, we don't want to buy jewelry. We want to buy a piece of gold, a ring, which can be converted. I mean, you can wear it immediately. And I just asked them that why not jewelry? You want to buy a gold, and then This is like just 5 gram gold. So they said, no, because I will buy it and wear it in my finger so that nobody can take it away. So the whole concept behind it for them was to have a control on my asset. So what they were demanding is design a product in such a way that whatever I save, I get a control on my asset. So that was very interesting for us. And since then, if you come during Diwali day to Mandeshi Bank in all our branch managers are like sitting around kilos of gold and giving, dedicating each one of them with their name and bills and everything. And there are like thousands and thousands of women are uh, coming every day and would take the gold. Now, these same women who are thinking of gold and creating an asset, they said, they told us when we were having another product, joint liability group product, and some of the women said that we don't want to be a part of that group lending. We said that you don't have collateral, there is a peer pressure, you will be able to do it. They said, but every month, every week or month, we have to give installment, and from our cash flows, we won't be able to do it. But if we take a loan for goats and you give us a moratorium period of 3 months, and after 3 months, we pay more than 50% of loan back, allow us that. So then we thought, like, why? I mean, they can buy goat, and so they said, no, after buying goat, when the goat delivers a kid, which we sell in the market, and then we get a lump sum amount. And so they took loans for goats. And when we designed that goat product with the very different way of repayment, we were surprised to see that every time hundreds and hundreds of women will tell us, and not only that, they would say, send your agent to the weekly market, we will select the goat, and the amount of the goat, whatever is it, will be our loan amount. We don't want more, we don't want less. So it was so interesting to see that whatever product we are designing for the customer as a banker, how much do we know their cash flow? That is number one. And in the formal sector, cash flow is very much a salaried, monthly. But whereas in agro-based sector, if you go, the cash flows are very different. So then it becomes very important that you design the product in such a way, either it is savings or it is credit, that it not only one, it matches the cash flow, but the most important part I saw with women was also that it has to create the wealth, as you mentioned, Kalpana, that Pallavi, that wealth is very important for women. So is it going to give me a control on my assets? Is it going to multiply my asset when I'm taking loan? That becomes very important. So I think there are two areas. One is to understand the cash flow of client, and the second, what planning she has in mind when she is borrowing particularly. They are very, very cautious about that. That while I borrow, and then I would come later, but in, they know what they want. But sometimes in crisis, they may also need our help. They need support. But it is very important that when you serve these clients, it is very important to understand their cash flows. And second, try to sell things what they want. Don't sell things what we have it. I think that is a major challenge if we go as deeper in the grassroots level. Thank you.
Thank you, Chetnaji. What a fascinating story. And there's so many things that one can kind of, pick up, from this story in terms of, you know, uh, how do you kind of, become a customer-centric organization, and the whole idea of listening to your customers. That's one strand. The other strand is also that our customers, you know, no matter which income segment they are in, uh, they have multiple needs and aspirations and dreams. So, as an organization, I think it's about understanding, those needs, designing for those needs, and delivering to that customer segment. So, and this, if you look at as an, BCA, networks as a, large network of, hundreds and thousands, at times even hundreds of thousands of agents, how do you kind of, orient, that kind of a large organization, large network towards these kind of, aspects that, okay, listening to customers, serving, building trust, making it convenient for them. So anyone who would like to pick up on these aspects, Sunil, you want to, and especially, you work with, how many members we have in BCFI?
Yeah, thank you. Yeah, about 65.
65 members.
Accounting for 90% of 3.2 million EPC agents.
Wow. So how this kind of, phenomena can be looked at scale, how your members are looking at this,
Yeah.
so that'll be wonderful to hear. Thank you.
Right. Yeah, thanks, Prabhat, for inviting me. So I'll first give you how the network evolved. So we must first of all thank telecom, because bulk of the network that we see today is courtesy telecom networks, not for their connectivity, but for the distribution that they have bought. So we talked about base of pyramid customers, and reverse of that is HNI. So HNI has a relationship manager, and I would say that BC agents are the relationship manager for base of pyramid customers. Why? So that, today at retail, we deliver all the fast-moving consumer goods company like Levers and Procter and Gamble and all that. They deliver goods. We are in the business, starting with telecom, we are in the business of fast-moving consumer services. And when we say fast-moving consumer services, means the cycle time of consumer services is every day. Typically, the goods have shelf space and shelf life at the shop of about 3 to 7 days. So in 1 month, you have a cycle of 3 to 4 times. You are rotating the capital of the seller. Whereas in the fast-moving consumer services, starting with telecom, you are rotating it every day. In some cases, you are rotating 2 or 3 times every day. So when we talk about margin or all the commercials, we need to see how fast we are rotating the capital. And basis that, the business model have evolved. Starting with telecom, where the telecom had smaller ticket size. So it is anywhere started between 200 rupees to 300 rupees or $4 to $5. Now, and that became a very large industry by itself, accounting for almost 1.5 million recharge point. Now, recharge point you can correlate as a cash in cash out point for BC networks, because what they were delivering was not new connections, and new connections for telecom is equivalent to new bank account in financial services. So bulk of these services were through the telecom recharge network, but they were also doing other services, other goods and services at the same shop. So as the FMCES network is evolving from delivering telecom recharges to delivering cash, then we have today, if you look at it, out of these 3.2 million BC agent points, about 200 to 300,000 points, which are called the dedicated bank BC points, which in the RBI definition comes as a banking outlet. So they are doing all the services: account opening, cash in, cash out, money transfer, government schemes, etc. But they are still not doing to that extent lending or lead generation. The bulk of the, I would say 75 to 80% of the 3.2 million agent points are the recharge points. And the recharge point means cash in, cash out, and money transfer points. They have all the capabilities in terms of technology to go beyond cash in, cash out. And that's why we had this very useful meet in Goa about 2 months back, courtesy Grameen Foundation, where we had reimagined the next 5 years of BC network as to what services are required. And invariably, all the corporate BCs who were predominantly working on cash in, cash out and domestic money transfer network have said they want all services. They just don't want just cash in, cash out, because that's where the value add happens. This network has been set up. The technology is available. So even in the current discussion that is happening within Department of Financial Services and the group of banks and IBA and BCFI, it happens every month, every second month, as a part of value add and improvement of BC services. Every bank and every corporate BC wants more services. Now, your question was, how can we make that happen? So, capacity building has been challenged even in the telecom network, by the way. 1.5 million recharge outlets, but SIM selling outlet or new connection in India is less than 100,000. It's not more than that. So it is, you can correlate that if we have 3.2 million and we have 300,000 or 400,000 pure banking outlet, we are better than telecom in terms of ratio. What has also happened is that the interoperability has led to substantial transaction volume on cash in, cash out network. But as you have rightly assessed, the capacity building for pure banking, which is lending and liability products, has not taken off in the same way as the cash in, cash out, simply because, just like, I give example of a fuel pump, a petrol pump. You don't need to do marketing or selling for petrol, but you need to do marketing for and selling for lubricants, because there are options available. Similarly, for SIM selling, again, you need to make sure that whether Airtel, there were 8 outlets, there were 8 telecom operators. For SIM selling, there is a marketing required, there is a push required. But for recharge, once the person has a connection, you don't need that. So there is these all 80% of 3.2 million outlets are used to a customer walking in, like Pallavi mentioned, and said, I want to withdraw 4,500 rupees. They are not willing to listen to, they are willing to listen, but the agent has so much other work to do, or he did not yet assessed the value of delivering services, because that's where the margins are higher. So if you do account opening, lead generation for loans, liability products, etc., the margins are significantly higher. But historically, there have been more paperwork, which is changing now, because India is one of the first, or one of the only country where a model of account aggregator has been brought in. And this account aggregator model would revolutionize lending at the base of pyramid, because not only unsecured, but even secured lending today takes a long time in terms of paperwork, all due diligence, etc. Account aggregator network brings the transaction information of the customer, the GST, if it is MSME, or income tax later on, to the lending institution instantaneously, and potentially with a fuzzy logic, you can offer the loan of sub 10,000 rupee to that particular customer, which is what Chetna has been talking about, that we are talking about micro transaction, not only on just payments, but also on lending and deposits. So this particular option requires significant amount of literacy. And that brings back to the literacy in terms of first understanding, and second, giving them the understanding of potential, what margin they can earn out of it. They can earn 0.5% on cash in, cash out, but can they earn 5% on a particular product? Can they earn 10%? Even let's say insurance. Insurance, first time, the insurance agent who sells gets 25% overall, but insurance repayment of premium hardly has any margin. So overall, the long answer to your short question is that in terms of network, it is ready. In terms of technology, it is ready. What is required for capacity building is specific effort by all stakeholders, which includes the government, the regulator as well as the banks, who now will find that the BC agents and the corporate BC are the link or the relationship manager for taking the next level of liability and deposit financial products, to say that the least, to the suburban and rural areas. So that's I would say is my take on that.
Make one sentence which Hillary is sitting here. So, this is a good opportunity to think about how to invest in the training and capacity building of this network that has been built. I think donors definitely have a role that can create a very, very valuable and vibrant public good in the country. So, just making a one-line pitch, if that is possible, on behalf of BCFI.
Thanks, Sashi, for that. Absolutely. And also, I mean, we will have, a lot of time for Q&As. Actually, I like to kind of make it interactive. So please, keep thinking of your questions, and we'll come to you for your questions. So picking, Sunil, on your submissions, uh, one aspect which comes that you talked about, let's say, differentiation in agents. Some are able to do sales, others are only able to, let's say, recharge, whether it is sim recharge or selling lubricants at the gas station, or even the agents mostly doing only cash and cash, only some being able to. So is it uh, by design or by default? That's the question. Is there something that can be done so that a more number of these 3.3 million agents can also do sales? What that approach would look like? I don't know. I mean, who would like to take this? Sunil, you, Pallavi, you, or
Yeah, maybe
okay,
I think I'll start and then Pallavi
yeah.
can
Thank you.
pitch in. So historically, you know, time value of money, time value of money, or I would say value of time at the agent was always the question. So if you look at any recharge transaction or any cash in cash out transaction, the typical time taken for that is less than 10 or 15 seconds. And either you have it or you don't have it. There's money available in your account, so there is a successful transaction, or there is none. So, and over period of time, the web application as well as mobile application have been made so user friendly and in multilingual variant that the overall requirement, so a cash in cash out is just like a point of sale terminal transaction. A POS terminal does not require training to any merchant. So that has been the reason for its takeoff, whether it is telecom recharge or it is cash in cash out DMT on financial services. The moment you go beyond that, you need more time of the agent, and the second one is the success rate. The success rate of cash in cash out transaction is almost 100%. So if you go there and you do a transaction, if there is money in your account, you will get the transaction done. There are no problems with that. The success rate of anything beyond that, that you are now trying to ask him to open a bank account, look for a loan, look for insurance, etc., 4 out of 2 out of or 1 out of 10 attempt, you will be successful. And although that's why the margin is high. So it has been not by design, it is by default that everybody thought that let me first start working on this and earn money out of it, and then I see what all I can do beyond that. And for all I can do beyond that, there is more, uh, first literacy, second effort, and third understanding of the business case of what he is trying to do. So somebody will not give insurance agent 25% just because they like him. It is because there is an effort in pursuing the customer to buy something which is a discretionary product in Indian sense. Because in India, insurance was sold as a tax product in urban. Insurance as a product, once it is being told as an importance of that for health, for life, etc., it's an effort. And that effort requires time, that effort requires literacy, that effort requires understanding of the business case, that I will spend this time, I will get this money, and maybe initially 1 out of 10 will be successful, later on 3, and the success rate will go up as I build my reputation. Now that entire ecosystem building cannot happen overnight. So what has happened is, by default, the low-hanging fruit was the cash in, cash out. And then, as I see now, many of the private sector banks have, have created, so I'm sorry, there was one more item that many of these required a lot of documentation and paperwork. So that has been now solved by a fully digital journey. So now, if you want to do an account opening, it's a complete paperless process. If you want to get a lead generation, it's a complete paperless process. The account aggregator network is completely paperless. So if you are looking at reducing the barriers to lot of documentation and paperwork, that is happening, and that is leading to reduction in cost of acquisition, and therefore leading to cost of reduction in ticket size for these products, which is now going to make it much more viable at at different locations. So these are all the areas where the BC networks would graduate from what I call as transaction BCs. Transaction BCs are all who are doing only AEPS, cash in, cash out, and DMT, to what we call it as asset BC, which is what our friend Shashi is. He is one of the rare BC who does a significant amount of his business on asset BC. Thank you.
Thank you, Sunil. Pallavi, do you want to kind of talk
And,
about
yeah,
the
thank you.
segmentation aspect?
Yeah,
Yeah,
so I'd
thank
love
you.
to add on to what you mentioned, Sunil. We do believe that most BCs are ready, have the technology, have the motivation to move out from just cash in, cash out. But it's not a one size fits all. In fact, what we do is we profile up. We work with over 3 public sector banks now, and we've profiled around 4,000 of their BCs. And what we've realized is, and I'll quote some numbers, around 12% of BCs today are what we call successful relationship managers, doing a lot of the things that we want them to do. But there are also 26% who are like disengaged, not really doing anything. Maybe 5 transactions, the minimum 5 transactions that they need to do to stay alive. Then you have two more segments. One who we call motivated transactors. So they have a lot of customers and they're doing a lot of transactions, but they need that mentoring and that supervision and definitely that training to help them acquire the skills to be able to sell savings or pitch other products beyond transactions. And a good 32% are just small. They don't have the threshold customer base. So because there are these 4 kinds of BCs, we believe that you need to have a segmented approach and therefore do different initiatives to support them. So maybe the small one, they need to do more outreach efforts and grow their customer base. The transactors, you'd obviously have to mentor them to help them on how to cross-sell products. And the disengaged, I mean, there is some amount of supervision, branch engagement, and then probably just weed them out. So yeah, I just wanted to, share that aspect that there are different PCs out there and you need a differentiated approach.
Thanks, Pallavi. Probably you have been very patient and I've been, waiting for the right question for you. And I think now with all these conversations, so as Bill and Melinda Gates Foundation, you work with multiple partners in India and also globally. And there are lots of great examples, of, let's say, innovations on various domains, whether it is about, say, things like activation, on liquidity management, some real teething troubles that the agents face in their everyday lives. So I think if you can share some, examples around, that, so that this whole network of 3.3 million, which has been built, beyond access, it kind of leads to greater customer empowerment through usage and all of that. So some examples will be really helpful. Thank you, Prabir.
Thanks, Prabhat. Before I start, I want to do a quick pulse check of the audience. So, how many of us, by show of hands, how many of us have transacted at a BC agent outlet? Can you just show your hands? Right, that's about 50% of the room. Second follow-up question: how many of you have gone to a BC agent outlet to transact, and then found out the BC agent actually comes and sort of dusts off the dust of the machine, and then comes and sort of activates it, and then says, "Okay, what do you want to do?" Has anyone had that experience? Yeah, I'd say around about now 10% of the room. So I think that segment is what actually we need to start talking about more. This is the dormant, semi-dormant agent, segment, who's supposed to be a BC agent, but really is not active as such. And again, that again is, I think, because of the viability issues that we've spoken about over here. I think internationally, I'd just like to talk about how some of the agent networks have evolved. Like for example, we had this P2P based model which was very popular in Kenya. And that's how it evolved in Kenya, where we actually had large number of remittances. And that needed to sort of be digitized. And we saw Kenya's agent network grow because of that model. In India and in places like Colombia and Brazil, it was more G2P led, where there was a lot of infrastructure which was built by the government to, again, drive G2P payments, get benefits out to people. And that led to, again, the expansion of the agent networks there. And in cases like China and what we're seeing in Indonesia, it was almost e-commerce driven, where the initial forays were made by the government, again, to deliver benefits. But then we also saw an inflection point where we saw the emergence of digital platforms and e-commerce providers come in and start utilizing these agent networks for delivery of products and services. I mean, you had Alibaba's Taobao program, which is very, very famous. In Indonesia, you had the emergence of platforms like Gojek and platforms like Bukalapak, which basically sort of used the agent networks again to drive, e-commerce delivery as well. And I think that's where we've seen a lot of innovations happening. In India, I think that's where we're also seeing how we can actually start looking at the agent network as the next, let's say, distribution 2.0 model. I think as Sunil was mentioning as well, we've seen the agent typology of having, sales agents and service agents. And like Sasi mentioned, there's also a need now for advisory agents. And this goes back to the point that Pallavi made about having this relationship building, activity, which needs to be more important. In my previous role, I mean, I used to manage an agent network as well. And almost very closely, and this is about more than 10 years ago, we had the same numbers. The top 10% of all BCNMs in India would have high performing agents, and this 10% would be excellent relationship managers. They do demand aggregation at the customer point. They'd be able to understand what the customer needs are and drive products and services, whatever is available. Because also don't forget, there are a lot of products and services that should be delivered through the BC channel, even through the PSU banks, but are not activated yet at the BC network level. Again, 26% would be people like I spoke to, the people who dust off, their machines and say, okay, what transaction do you want to do? Do I have liquidity? We'll have to figure it out. I think that is the part that we were looking at in terms of trying to see how we can solve for them. In terms of examples of very good practices, we know, for example, in places like Uganda, where we've seen now shared agent networks, where you have the infrastructure that's being built, but necessarily not every single bank has to go and build its own infrastructure. You can share that network. That seems to be promising as well. Though it has its own issues and challenges, it seems to be a promising step. Liquidity management, we've seen again the rise of, let's say, working capital credit, which has been given to BC agents. That's something that's driving a lot of activation of transactions as well, especially for agents who are located in remittance corridors, especially receiving ends, where the large use case is cash out. But again, you need more liquidity to actually serve those customers better. So we're seeing some innovations, and I think for us as an industry, we need to start looking at innovations in the distribution network that is the BC agent, because I think the holy grail of any distribution network is cross-selling. And that is something now we need to start focusing on. We've got this amazing network which actually has so many touch points in rural India. How do we now leverage this network to deliver more products and services, which again lead to some aspects of viability for the last mile agent as well?
Thanks, Prabir. So, looking at these kind of examples, I think there's just so many possibilities out there. Even in India, I think Sunil was talking about the account aggregator framework that is coming in. We are hearing about, let's say, how ONDC, for example, can be a game changer for not just the customers or agent, but also the micro and small enterprises in the country. So, looking at all of these possibilities, let's say, Sashi as a BC network, how do you think, you're going to, let's say, you would like to, leverage these kind of possibilities which exist, and what are the kind of levers, one would need to pull to make this kind of reality, on all fronts?
So the way I see it is that going forward, we will have a mix of all kinds. Right now, there is a majority transaction and there are a few multi-service. But I think as we go forward, there will be a lot of movement towards leveraging all these rails that are being laid, right? ONDC is a rail on which you can do e-commerce, account aggregator is a rail where you can do lending. There are all these opportunities. See, good thing that we see in India, unlike many other geographies, and of course they have their own benefits. In India, the network is laid down, again I will use the word as public good. It is available to use. And now it doesn't have to be that you use the network in only one way. It doesn't have to be only for lending, it doesn't have to be only for e-commerce, it doesn't have to be only for transactions. Now the opportunity is out there to serve that market the way the market demands. So there are some markets that are not matured enough where you probably don't need to worry about e-commerce right away. But there you need to make sure that the agent is able to serve every household in that community with basic transactions. That might still be a big need because there are a lot of areas where we don't have even that. But there are places where they have fulfilled that need to a large extent. Now that agent can now start looking at value-added services, not necessarily goods, but services, which is where account aggregators and Oken and other frameworks will come into picture. Then there are markets, maybe urban markets, where all basic banking and value-added services are accessible. Now, how do we make sure e-commerce is also accessible to those communities in a more democratic manner than any other? So if I look at my network, I see this network playing all different kinds of roles depending on the market opportunity. Until now, we did not worry about market opportunity. We said everywhere we need a touch point. That is the whole sub-key part of it. Now the touch point is available. Now how do we make sure that the customer that is being served by that network is able to use that? Of course, it has to come with all the things that we discussed, the training, the technology, and regulation, bank interest, a lot of other enabling factors are required. But I think those enabling factors are very visible to us. They are all moving in the same direction. Hence, we think that possibility is out there. So in my opinion, we have to now devise a strategy as an industry and of course as individual BSc and NEMs in terms of how do we make sure that this network evolves in the direction that it serves the customer needs, back to the story that Pallavi shared, happens, right? And that, in my opinion, is the discussion that we were having in other forums. How do we basically make ourselves ready for the next phase? So that is the real proof of the pudding, because so far investments have happened. The recovery has not happened. The recovery of that investment, I think everybody, all of us worry about viability, but I think that viability problem and the whole return on the investment problem will be solved in the next decade. But I think we've done a tremendous job in laying that foundation to be able to do that. There's no need to worry that, hey, what is going to happen to networks. Now the worry is about how well we can oil and benefit out of this network, which is, I think, all of us are working towards. So I'm very excited to get into that journey.
Thanks, Sashi. Uh, so one is, of course, we are talking about all the immense range of possibilities which have opened up now that this network has reached most places, maybe not everywhere. Uh, so two perspectives I would like to kind of touch upon. One is that even with this 3.3 million outlets, there may still be really remote areas where there may not be a where the viability is just not there to set up an agent point. That's one. How do we kind of take care of that? Secondly, even in the uh, larger financial inclusion, if we look at the usage of various products and services, we talk about that. Okay, accounts have been opened, but there's 20% or so whatever accounts which are dominant. That's, we are just talking about the basic bank account in terms of savings. The moment you move to uh, access to other products, now loans, micro loans, it's abysmal. 16-20% people who actually access formal loans. Insurance penetration barely in single digits or touching double digits, just about there. So there's a big gap between what is needed or what is possible and where we are. So how, for example, Prabir, I don't know if you want to talk about this, how this kind of massive gap can be, fulfilled in terms of inclusion, in terms of, impact, all of that. Thank you.
Thanks, Raj. I think one of the reasons why we've been sort of talking about this in different forums as well is to understand how we can do geospatial mapping better. Initially, the approach has been looking at agent density in terms of how many agents are there per population. But what needs to be actually done is actually try mapping areas to see where there might be a business case for agents to perform better. And I think that's been done very well, let's say, with the telecom providers. They've actually done the mapping of, let's say, the towers to figure out, okay, where are the users, where do you need to put more towers, where do you need those many towers. And I think for agents, while there have been efforts, it's not really being used as much as it should be. individual BCNMs now are doing it very well. They're actually understanding where's the business case for us to put an agent. If there's no business case, is that when there is a need for, let's say, the government to get involved in terms of some subsidies, in terms of trying to see can we get an incentive out. This would be something like how the stipends are being sort of rolled out for some of the BC agents in some of these areas, just to make sure that while they sort of figure out the business, figure out what the customer footfall might be like, there is some motivation to still keep transacting. In some areas, again, as part of the nation building activity, there will, of course, not be enough of customer generation. Because of, again, these are these hilly areas, you have the northeastern states, you have some of the other areas where you know that the population there is anyway limited. So the fact is having a BC agent serves a purpose other than just looking at, having viability of the agent, but actually making sure the populations there have access to financial services. And that's where I think a lot of the infrastructure, while the infrastructure development happens, a lot of support is needed as well. So I think we should start now thinking about looking at if we need to actually have subsidies, are they targeted in the right areas? And also BCNMs now, I think, are moving away from the traditional code-based system of delivery where you'd have to go to the bank and get a code for your BC agent to be able to deliver them. I think it's moving away because we have different types of agents who are coming. What we've noticed is that the best way to actually look into getting agents more viable is to focus more on non-dedication and non-exclusivity, which basically means you're not a dedicated BC agent, but you have other businesses as well. And you're able to sort of supplement your primary business with some activate financial services that you're providing to the population. And of course, in India, it's a little difficult, but the whole point of non-exclusivity would be to actually work with more than one provider. Again, there are sort of rules and regulations about what you can and cannot do. I think that what comes in now is then leveraging this network for non-financial products and services. We've seen that there's immense potential in that. In fact, I think Prabhat, you and I were talking about how, based on the recent study, I mean, 8 to 10% is the commission that that BC agents can earn on e-commerce products, even if it's through assisted mode. I think that's something which has a lot of potential, and because of the organic sort of development of other platforms in the country, I think it's very, very important to make sure that the BC network, again, also is part of the development as well.
Actually, Prabhat, I would just like to add that when we have more than 3 million agents, and with Mandeshi, what we saw was that these agents, they are, on one side, we look them as a service provider or a sales agent or marketing the product or getting other services, but they also have the information of failures of the product. And I think that is also equally very important, that how that knowledge, and I would just give you one example. Once our agent came with a woman and to the bank, and she said that as her husband has left the house because of the overdraft, and now she is alone taking care of the children. So then you realize that if agents are available, there won't be the situation for the families to leave the village or leave. But there is an advisory, what I can do. There is a door which I can knock at the time of emergency. I think when we are doing financial inclusion at the bottom of the pyramid, these type of services also agent can provide, and also information agent can give, that this can happen. I mean, when there is a over credit going on, particularly we have seen in microcredit products. So I do think that agent in advisory or actually in emergency, they can be really, really helpful to the people or the families. And in fact, not only emergency, but that emergency don't come. And agents know that very well, that how that family, what is the situation of family. So I think getting empowering agent in that area, getting the information from them, what is failing, those things are also equally important. And how do we get that information and document it, because that data agent can provide.
Yeah, so this is very important, and I think I'm just trying to build a scenario, right? I'm going to be a little provocative here, thanks to IFI, which brings together all kinds of financial inclusion players to this. Once upon a time, it was only microfinance. Now it is, we have the whole BC network sitting here, the whole MFIN Sadhan network sitting here, NRLM as a network sitting here. But it's so, honestly speaking, I will be, again, as I said, I will provocate you. It's unfortunate that all of us work in our own silos, solving the same problem. I don't think NRLM collaborates effectively with microfinance industry. And I don't think BCFI or BC industry collaborates well with microfinance industry or vice versa. We are all trying to be in the same location, serving the same customer through different programs and being the most ineffective. Now think about all this thing coming together. That agent can be what you're talking about. Now, why that agent doesn't do that part is because that agent is only serving one particular need. And now the same village, another loan officer comes from a microfinance institution and provides a loan. By the way, we keep talking about Northeast, keep talking about various areas where the density is less, hence viability is less. The largest microfinance bank in the country resides in Eastern India, perhaps the most profitable. That's why it is the largest bank. And they serve the most of the north and northeast India. They are not serving South India as much. So why? So how come they become such a large bank serving the same market and become so profitable? And while we are saying that, hey, the same market, we cannot be viable because we are not leveraging the network that has already been created. Why is a loan officer not a BC agent? Why is NRLM animator not a BC agent, or an SHG leader not a BC agent? Right? So I think we keep talking about this, and there are anecdotes, there are good success stories, but it's time for us to bring these programs together and then see what can we do. I think wonders can be done. I think it's already viable. We are just dividing the pie and trying to double up the costs, but the revenue is coming from only one customer, right? So I would, provoke that discourse. Maybe this forum, maybe there should be a panel where an MFin fellow, a Southern fellow, and a BCFI and an NRLM should be, brought together and say, how do we collaborate and make this most effective? I mean, just to add that. But otherwise, we keep talking about viability and we think there are challenges, but I think we are solving different problems in different ways. We're not coming together.
Wonderful thoughts and question, Sashi. Thanks for bringing it out. So I was just going to, actually point it towards Prabir. Maybe, you can kind of, if there's a way, you can all help all of these different kind of, segments kind of come together. But before you kind of respond, maybe you want to say something.
Question was about unviable BC locations, and there is a straightforward solution which is not yet implemented. Just like telecom, there was a universal service obligation. So all the telecom operators' revenue was collected, and a portion of that was given to BSNL to go to locations which are not mobile viable locations. Towers were not viable. Now I already shared this with Larry. Prior to 2016, financial inclusion was the Friday afternoon job of most of the banks because it was a tick mark for RBI this thing. But no longer. You now have 450 million bank accounts which are PMJDY account, having anywhere between 1.5 lakh to 1.8 lakh balances. And these balances are not fixed deposit; these are simple savings account. So 2.5% to 3% is the interest they are paying, and the lowest interest, including housing or corporate, secured or unsecured, is lowest interest rate is 9%. So we are talking about a gross income of 6% over 1.5 to 1.8 lakh crore. That's about 10,000 crore. And what is the cost? Cost is BC network. If we add together all the transactions, commissions that we are talking about, it will not add up to 1,500 crore. So 8,500 crore actually denotes a NIM of 4.5 to 5%. Take out a basis point from there and offer it. I mean, this will be very scientific. Whosoever has these kinds of bank account with balances, take out a percentage of that percentage is very large number. Take out a basis point from there. Put it in the financial inclusion fund for setting up these BCs where some work is being done that, for a minimum transaction of this much, these BC, even though they are not viable, will be paid X thousand rupees, which is something work in progress. But the funds can be made available just like what has happened in US. So, Prabha.
Thanks so much. We have 10 more minutes. So if you have any questions, I would encourage you to kind of maybe come to the mic and ask your questions while Prabir kind of give some follow-up. Thank you.
Thanks. No, that was a nice provocative statement, Sasi. But yeah, I think this also sort of I'd like to sort of speak to also about a conversation I was having yesterday with someone who asked us, what is the role of a donor organization in the whole VC industry? I think there's multiple roles that we can play, of course. From the supply side, there's ways that we can help sort of, de-risk maybe some testing of pilots and models. We can look at actually providing more information and data in terms of research and having technical assistance as well. On the demand side, there's ways we can support communication programs, capacity building, like you mentioned. And also, I think one important thing which we are now trying to do with our partners is also build this community practice. Typically, initiatives like this have been very inward looking, where you have the same people who do the same things. But I think where it's time for us to start being more progressive now is to, like you mentioned, build in people who would not be your traditional partners, people who are already doing things, maybe like you mentioned in silos, but bring them into the conversation. Try and see where the partnerships happen. Because I think for us, it's important to understand who the product owners are, who the distribution owners are, and how do we actually get them to start talking to each other. I think that's a role that definitely we can start to support. So I'll just stop there and just see if there are any questions maybe for the panel.
Thanks, Prabir. So floor is open for any questions. Anyone, if you have a question. Yes, Anand, please.
I'll blame Sashi for this question because he said provocative. I also want to be provocative with the question. So maybe 10 years ago, it wasn't possible for the collective action power of, say, the BCFI network or the agent networks. I mean, obviously missing in that panel is a bank, which is kind of part of the problem. So you have 3 million, which is a very significant number. And let's say, hypothetically and destructively, that you stop tomorrow and everybody says no BC agent transactions happen, problems will happen, right? It's very clearly that there is a leverage and there's a bargaining chip. Now, Pallavi said that this guy is supposed to be a wealth manager, right? Somebody who doesn't even get a fixed income on a monthly basis is paying his own rent or her own rent, is providing infrastructure, is paying internet service charges, is working all hours God sent, including weekends, doesn't get a nice State Bank of India guest house to go on vacation this holiday, gets paid nothing. So far, you never had any leverage. Now I believe there is some leverage. What is possible without kind of being destructive, threatening, and abusing the trust that has been built over all of these years? There has to be some mechanism of sensitizing banks. The 10,000 crore that Sunil just calculated. There has to be that money has to come from banks. I mean, I don't have any hesitation in saying that. It's not some donor or somebody else who has to fund, because the donor's funding will stop after a few years. They don't have endless money to give to this kind of thing. It has to be sustainable. And the only solution to this is banks actually embracing this as part of their channel. What efforts can this group or others do in order to get banks on the table, agreeing that this is a genuinely valuable part of their infrastructure, embracing it and taking on that capacity building which Pallavi was talking about? But without that, all of this is just talk. 5 years later, we'll still have maybe 5 million agents, of whom only 100,000 or so will be really, that wealth manager category or something like that. If you want that community to be served by a person with capacity, serving multiple products, as you were saying, by doing microfinance, doing cash in, cash out, doing other products, well, capacity is a real constraint. How can you get banks to do some of this and change their attitude, which is, I would say, arm's length? I mean, it's no longer Friday afternoon, but it's not like Monday morning either. So can we get them to Wednesday?
Well, I don't know whether I can answer on behalf of banks, but what I can certainly say is that there are ways to reimagine this network. Let's think about this, right? Microfinance is an industry that the industry that I understand more than other is actually going through its own transformation. There are a lot of digitization efforts are being done. One big area that we're all working on is to digitize collections, using agents for that kind of program, so that we don't have to send our people every fortnight or every week or every month. And then there are, of course, other ways that we are being working on digitizing other journeys also. So if you just take that as a case in point, how much ever we digitize, right? what are we doing? We're basically reducing the touch points of a loan officer with a customer by replacing that with some other digital means, right? Either data or a video call or something, so that we don't take out the touch from the customer, but we reduce the travel time, we reduce the inefficiencies that are in the system. Now imagine that is replaced by a touch point that is already created. In that village, there is an agent who is, financial agent. He's not some non-financial agent, some agent that is already doing some financial services. If that is your touch point, and you don't have any loan officer, one can imagine that, and you are anyway going to do a lot of things digitally, but you really need a point in the village, so that you need intelligence, you need some contact where the customer can pay or customer can apply or some customer can do something. I can completely imagine a situation where an MFI can completely leverage on a BCNM network and not having a single loan officer. It is possible. Theoretically, I think it's possible, but maybe 2 years down the line, it's us or somebody else will prove that. So I'm just talking about two networks coming together. And it is not, we have had situations where there is a touch point and then you do all the other digital delivery boys are like that. In Amazon, delivery boys are just a touch point, but everything else is digital. So think about this as a delivery point for financial services. And then, adding the other layers of enablement all are only left to the imagination of how do we, if that agent is basically an SHG leader, then the other part of this problem is also solved, because there is a other ecosystem that comes into play. So in my opinion, it is something that we have to imagine, and in today's world, we can probably make it happen. That is, some unimaginable things can happen. We can't imagine how things are moving, but at least we can start looking towards such collaborative efforts. And hence, every agent then will become much more comprehensive. We don't have to bring banks push products also. Already products are there. They are being delivered in the same village by different people. I'm talking about bringing all that together to one point. There may be some regulatory constraints. We need to work with the regulator to at least allow some such interoperability, if not competition between lenders, at least allow the same players use the same touch point. We're not creating any extra thing there. Maybe it is possible. A way to think about it. Yeah.
Brief, because we have just 2 more minutes. So just brief them. No, please, just brief them.
I just wanted to add something to the question that you asked. I do think we are working with 3 public sector banks, and I can't speak for them, but I will. They are trying very hard to invest in this network, all 3 of them, and they're doing it along with the partners that you mentioned. And a large part of the BCs that they're adding on are coming through the BC Sakhis that NRLM is providing. So it's not such a bleak outlook at all. And at 3 o'clock in the plenary session, you'll have some banks and one public sector bank to which you can ask the same question.
Thank you, Pallavi. Do we have time for one more question, or we should wrap up? Okay, so quick one question, if anyone. Please keep it short. Thank you. Oh, Smita, here. Okay, so let her ask a question and then you can make a comment, please. Thank you.
Eleven point 11.09% growth would be seen by 2030. So how we see digital payment and digital transactions are going to affect or are going to impact this journey of BC? Yeah.
Thanks.
And I also want to put a note, like everyone was discussing about rural targeting the remote areas, but we also should focus about the urban areas as well, because the age group like 40 to 50 or 40 to 60 age group are still facing a lot of challenges doing certain banking transactions, and they use BC. Like even my uncle, he's 50 years of age, he used banking transaction, he used a BC outlet for transferring money from his bank account to his Paytm. So likewise, these are two different questions, but I
Thank you.
just wanted to...
Thanks for question. And Smita, why don't you also make your comment? Please keep it brief. Thank you so much. Then we will have somebody respond. So maybe Smita, make her comment.
Okay. I just was looking maybe at Sunil, possibly, for a little bit of analysis of how many of these BCs are women. Well, when you are representing BCs, are you talking of individual BCs on the ground? Are you talking of corporate BCs? So to me, the issues are very, very different. Corporate BC, companies have completely different issues from the person on the ground. And the person on the ground issues are very different if it's men or women. And if you're looking at them being advisory, being, having non-financial services, also looking at their capacities, I think with women we have a very, very instrumental approach. Give them the credit, they will go and deliver something at a very low cost. Their wages are not important, their earnings are not important. These issues to me don't come up in conferences, and that really, it's okay if we just want to continue talking about corporate PCs, that's fine. But I think part of what Sunil was saying, this 10,000 crores, whoever, whether it's banks or corporate BCs, must pick up something from this, and the last mile woman BC must get something solid from this, not just the shopkeepers, male shopkeepers who are BCs. Thank you.
Thanks, Smita. So a quick comment and then we'll wrap up.
Yeah. So first to your question, digital transactions are definitely taking off, and that's good news. If you look at Nandan Nilikani report, he mentioned there that BC or cash is the safety layer behind digital transactions. So it's not either or, it is both, number one. Number two, as we speak, there are more services which are going, as I spoke about, that beyond cash in, cash out and DMT, which is expected to go down, not yet happening. The second would be even CBDC, when it is rolled out in the suburban and rural area, will be one big area where cash movement, physical movement will stop and bring more services. And for that, again, you need BCs to help that. And lastly, the three initiatives that are being talked about, account aggregator, ONDC, and the CBDC. These are all the first touch point for a customer will not be Google Pay or will not be Phone Pay. The first touch point for these customers will be the BC point, who will educate them to go from retail assist to self-assist, because ultimately the money is being made on structuring the larger financial product and not just cash in, cash out. And to answer Mita's question, yes, corporate BC is one part of the story. Currently, work is happening on BC agents viability and what also. So one is services and second is training, and both on both count. Not much impact is happening on corporate BC, but BC agents viability is what RBI, IBA, and DFS, all three are concerned about BC agents viability, and all the programs that are being worked upon are towards BC agents and not corporate BC, strictly speaking. Thanks.
Thanks, Sunil. Very, very short, please. Thank you.
Just to respond to the question, I think we've realized that any development in financial service delivery is a reflection of the economy. India is still going to have a very large cash-based economy, and that again will always need assisted modes. So we think there's definitely going to be a role for the BC agents even over the next 10 years, we see, as the economy develops. And I think, to Smita's point, let's talk on the sidelines. There's lots that I'd like to discuss as well, but yeah.
Thank you so much. It's been wonderful to hear from all of you, and amazing insights. Thank you everyone for your participation. Thank you.
Thank you very much indeed, our wonderful moderator of this session, Mr. Prabhat Lab, CEO of Grameen Foundation India. Thank you very much, our speakers, for being here on stage, and we've actually managed to conclude this session on time. Ladies and gentlemen, we are going to have a tea break for 15 minutes and kindly be back in the same hall for the parallel track sessions. And here we're going to have social protection, the role of female agents in last mile service and bridging the gap. The mementos will be given to the moderators and the speakers as they step off the stage. So you do have a tea break for 15 minutes and kindly be back here on time. Thank you.